Okay, second video for Sunday 29, outlook for Monday 30th of July. This is the dollar yen. Dollar yen chart on the weekly chart looks a right old mess, doesn't it? Right, I spotted the high up here, as you know, because we had the 200-week moving average and the 61.8% fib at 113.23. I think we topped at 113.16, so we missed it by just a fraction. There was a lot of price action up here as well, which told me that we would reverse. We did reverse. So those shorts were absolutely lovely the week before last. Now, you notice how that week we closed below this trend line, which goes all the way back to the beginning of 2017. So I saw that as another negative signal, and we did continue lower than last week, down to 110.58, just above the 100-week moving average. Now, this was slightly confusing. Again, this caught me out on Thursday because I didn't really see any reason for a bounce on Thursday. Once we've broken this trend line, going back to the end of May, about 2 months old, on Thursday, I thought, bang, that's it, we've broken it. I actually tried a short here and it didn't work. For some reason, we held the 55-day moving average, which is not really a significant support level. I would only have taken that as significant if there was something else there, like a trend line, to support it. But bounce we did, and it's not like we were particularly oversold. In fact, when you bear in mind that the stochastics were here, it looked very negative. Stochastics were quite wide, pointing down. There was nothing really to indicate that we were going to bounce. Now, this was a very bullish candle again. The new low, the higher close, whatever that's called, shooting star I think it's called, or hammer or something. Very bullish candle. Now, normally, having held support and the trend line bullish candle, you'd say, bang, we're going to go up. We're going to probably at least test this trend line at 111.35.40 and maybe get to recent highs at 111.55. I didn't feel that. I don't know why. I just didn't feel that that was the buy signal that it usually is. Yeah, you've got to be careful with these candles sometimes. You can't read one candle on its own. You have to look at the bigger picture. Anyway, I was right, and we did reverse back down, although we found some support at 110.78. So really, this is an inside day. What is that? 111.24 the high, 111.24. Okay, so this is an inside day. All that shows you is that the market is now indecisive. We've had a move down, and we're just consolidating that move. I don't think we're going to turn around and rock it. We could. I don't think we will. I think eventually we will break lower. I think the bigger picture tells us that there is dollar weakness and there should be yen strength. Obviously, it will help the bears if we can get below the 100-week moving average at 110.39. But I've got to say, it's a bit messy. At least the other charts were giving us some sort of range to trade. This I don't know. I feel like I want to hold a short position, but entry point right now, I really wouldn't be sure where it is. So I'm going to sit and wait for this one. The yen pairs are all a bit messy. Actually, I'll show you the weekly chart. This is the euro yen. I'll stick with the yen pairs for now, and then we'll do the Canadian dollar. So the euro yen weekly chart. Wow, that's just a mess. I don't really see anything clearly, any clear signals on this one. We have got 200-week moving average support, which did quite well when it was tested in March, but I wouldn't base a trade solely on that. So that's not telling me anything. The daily chart. Okay, well, we've got, we topped out here as I, for some reason, expected. I just thought the 200-week moving average would hold, and it did. 200-day moving average would hold, and it did. Lucky guess more than anything, really, because there wasn't an awful lot else going on there. I think it was because I also saw that the euro was likely to weaken and the yen was likely to strengthen against the dollar. Okay, so being short this really worked. That was nice. We bounced off this trend line, as you can see here, on Wednesday, but again, I wasn't fooled. I did think that that would turn lower, and the 100-day moving average has really done its job. We reversed on Thursday. Now Friday we've closed below this trend line, so that looks negative to me. I wonder if the yen will strengthen. Maybe the euro will break lower. I don't know. But this isn't the biggest signal. You know, this isn't the most exciting signal I can see. If you're trading it, I would trade it from the short side. Watch for the break below the 55-day moving average, which is around the 129.15.10 area. See if we can trade down to this trend line going back to February, which is around the 128.70.60 area. That could be very good support, and we could turn around from there. But we are getting oversold as well, so that's another good reason maybe to buy down there. Other than that, I don't really see anything that's massively exciting on this chart. Yeah, the yen pairs are tricky. Weekly chart for the pound versus the yen. Now this one's a beauty. we were getting short up here because we had 38.2% fib resistance. We had the trend line going all the way back to, what is this month? April of 2017. And we had the 500 week moving average all intersecting. You absolutely have to sell it when you see something like that. And that was a beauty. The week before last, we headed lower and made some really significant profits after catching almost the exact high for that move. A little bit lower last week, not the follow through that I'd hoped for. Daily chart still looks negative. Okay, rejected that trend line up here, and you can also see we had the 100-day moving average, which is often very close to the 500 week moving average for obvious reasons. So let me try and scrunch this up, show you that trend line going back to April, right, a little bit clearer on this chart. So bang, trend line held, 200-day moving average held, and then we broke lower. I'm going to open this out again. Below the 100-day moving average, sent us down. We collapsed straight through the 55-day moving average, and now that's acting as resistance. This still looks negative. I actually ran my short to around about 10-15 pips above where it closed on Friday. I just thought, get out of it for the weekend. We've got a little bit oversold on the daily chart, so I don't mind. I will look to get in again, and I'll give you some decent levels to sell. If we get anywhere near 146, 30, 40, around that 55-day moving average, it's probably worth a try. If you're still holding shorts, I would feel very comfortable with that. I do think this will continue to go lower, but I just wanted to be flat for the weekend. Right, Canadian dollar versus the US dollar. We spotted the turn here, and we ran shorts. There was a nice little double top with some long upper wicks, and we ran some shorts down to this support level where all the fibs met and the trend line. Then we bounced and we have reversed. Now then, not quite sure why we've paused around this area. Okay, yes, from price action we've got this little spike up here from the June high at 130.67, but we've broken this trend line which goes back to April. We've broken the 55-day moving average, so I think we go lower. I actually closed out of my short on this on Friday as well because I was just bored of the sideways action for the last 2 days and want to be able to clear my head over the weekend. But I think this also goes lower, and this ties in with my theory of a weaker US dollar going forward. So I think the Canadian will strengthen eventually. Maybe try a short around 130.90, 131.00 if we get there, but you've got to be prepared to add to it if we get up to 131.70. So a little bit tricky when we're midway through the move in getting into a fresh short, but I will be monitoring it. Obviously, if I see a good opportunity, you'll know. I don't see any reason why we can't target 129.86, which is the 500-day moving average, and really I don't see any reason why we can't target 129.60, which is the 100-day moving average, and then we've got some decent support from there down to this trend line at 129.40. So that 129.60, 129.40 area would be strong support and might even be a buying opportunity. I'll have to figure that one out the closer we get to it. But anyway, as I say, I do think dollar weakness, Canadian dollar strength. By the way, the reason I cover those 8 Forex pairs is because I've been through loads of different Forex pairs over the last decade or more. And I just find these are the ones that tend to have the most action, are the easiest to read or the less difficult to read, and give me more consistent results. So the reason I don't trade something, for example, like the Swiss franc, is because I just don't see great opportunities in it. Right, this is a chart of gold, which just holds its fibs really nicely, as you can see. Okay, I'll show you the weekly chart. The reason we've got support down at around that 112.15 area is from the 61.8% fib, which has held really nicely. You can see the week before last we had a big bounce off there. But the bigger picture is still negative. We're not able to get back above the 200-week moving average, and certainly this big trend line going back to December 2015, that is a significant trend line, over 18 months old. At the mid 1240 area would be another big resistance level. Anyway, we haven't needed to worry about that one because the mid 1230 area, which I had as a strong resistance level, has held anyway. So the range is from the sort of 1215, 1212 area up to 1235 in what is a sideways trend. Note those stochastics down there looking very oversold for gold, but I wouldn't pay too much attention for that on the weekly chart. Short term, we've got a 23.6% fib on the daily chart in the mid 1230 area as well, 1233, 1235. That's why I've had that as strong resistance. Initially, I didn't have the balls to call a short on that, and I wish I had, but I didn't know that this would be a sideways trend, and I was just cautious because I thought we could bounce back up to what would have been a better selling opportunity in the mid 1240 area. But anyway, if you have been trading that resistance that's in the 1233, 1235 area, well done. There's been some decent trades on that, as you can see from the daily chart. But we're also holding the 12.15 Fibonacci support level on the weekly chart. So there's your range. It's a 20-point range. We just keep trading that range until we break and see which way we're going. The stochastics certainly aren't giving us much indication of what's going on. You can see there's a bit of negativity on the moving averages, but these are such a lagging indicator, I wouldn't base a trade on those, but they're looking a little bit negative on the daily chart. I have to say that with the weaker dollar theory in the back of my head, I would be looking for a reason to buy gold, but I can't see it. If anything, I think gold goes lower. There's no reason why gold can't go lower against the dollar, just and in a general dollar strength market. That's what I'm seeing.